Okay, how do I come up with these lines? These lines are called key levels of support and resistance. Okay, well, let's zoom in and see how we did it. I look at these areas that hit the most. So wherever they bottom out and top out the most, that's where I'm going to create a line. This one has 1, 2, 3, 4, 5, 6, 7, 8. About 8 times it topped or bottomed out here. So this is why I'd put a line here. This is a key level. Why wouldn't I put a line here? Because this only hit here, around 1, 2, 3, maybe, 4 or 5 times, possibly. So I wouldn't put a line here because this one has more points where it's bottomed or topped out at. Now, when you're trading, this area, we'll start trading tonight. You always want to put your key levels in the night before, day before your next trading day, and you want to probably look back 3 to 5 days, maybe a little longer, in this area where it's starting out at. And you probably want to go up 200 or 300 points, maybe 400 points to be safe, and down 300 or 400 points just to be safe. And you look back to see when's the last time you were at these price levels, 18,570. So we're looking back, and look, we've been around this price level for a while. Let's see, we've been here since what was it, May 30th? So that's May 30th. And the last time we were at these levels, if you go all the way back here, was around May 14th. So this is how you want to be able to find your key levels of support. See, I drew this line all the way over here from May 14th. And this is where you can find your zones where normally 80% of the time, more or less, when you drop down to these zones, like if we were to drop down here, we should get good bounces where it could bounce up, 0.25%. 80% of the time, it's going to fall here and bounce up at least 0.25% of the time. And then it could continue to drop. Okay, but these are where you should get bounces. If you don't, if you flush like we did on Friday, if we flush all the way, look, we flushed, we bounce here a little bit, we bounce here a little bit, we did a little bounce, but we flushed, look, we broke through that level. This level was just, it didn't even bounce at these levels, it just flushed through. So that means that when we come back down here, we should get a good, bounce here at these levels when you hit these key levels, if that makes sense. We did form a W here, boom, and went all the way up. W's can also go here and down here and all the way up. It doesn't matter, but a good W is a bullish indicator. And I think the best time to get into your contracts are when you start to hit these key levels. So when you get up here, you want to get into sales. Okay. And then you probably want to put a buy or a stop loss 5 to 6 points above that. Sometimes 10, just depends on how volatile or fast the candlestick is moving. But you're safe to say, 6 to 10 points above, you can have your stop loss. Because if it does go past this line and it holds above this line, holds support, we will magnetize up to here or here or here, as long as we continue to break through these zones and hold support. it is possible you could hit up here, go about halfway, and flush all the way back down if it does not hold support. Typically, when you go through a line, you'll flush and then you'll come back up. And if you can't get back over this line, when it comes back up and to hit this line, this is when you want to enter a sell. Right here, sell, put your buy 5 to 6 points above there, maybe 10 to 12, depending on your risk, and ride it back down. The safest place to rebuy your contract when you are in a sell is at the next zone. Depending on how fast the candlestick's moving, you may be able to go a couple zones down or even flush all the way down, depending on market news and data and what's going on in the economy. So, but each of these zones are where I would be wanting to get in or out of contracts.